On the program today, Zambia wins debt relief, sets precedent for stressed nations. And Senegal secures $2.7 billion in climate finance from G7 nations. And Egypt, the central bank holds rates as prospects of imminent pound devaluation deems. Welcome. It's the final one for the week. Welcome to Business Incorporated. I'm Will Ibang. Let's go straight to the markets. First up, Africa, where intraday major equities were trading with negative sentiments. We saw the Nigeria's NGX down 0.22%. South Africa was down more than 1% to settle at 74,290 points. Elsewhere in Egypt, where it was closed on Thursday for the week, it was up, however, 0.04%, while Kenya closed Thursday's session in the green. Now we'll move over to the Middle East, where it's mixed, positive sentiments, very bullish in the UAE. We see the Abu Dhabi index up 0.3%, Dubai up 0.43%. But when we look elsewhere, where Saudi and the Qatari indexes closed on Thursday, it was mixed sentiments there. We saw 0.06% close for Saudi, and the Qatari index was down 1.34%. Now, the two-day summit for the Global Financing Pact in Paris, France, is ending today, and we have the chairman of Nigerians in Diaspora Commission, Mrs. Abike Dabiri, joining me from Paris. Good afternoon, ma'am. It's good to have you on the show.
Yeah, good morning. Nice to be with you. Or rather, good afternoon. Nice to be with you.
Oh, it's probably raining there, and the weather is, giving you the presumption that it's morning. We understand that. So, ma'am, you've been at the event, you've been at the summit. What would you say are the key takeaways from the Paris summit?
No, I actually wasn't at the summit. Inside the summit, is limited. But we are here to get the president ready for a meeting with Nigerians living here in France. And Nigerians here in France have been so excited that he's coming here, his very first presidential visit after he became president. And they're also very excited that he has ticked all the boxes, the right boxes, has done all the things Nigerians are very excited about. So even here in France, when you hear people speak, they're all excited to do business with Nigeria. They're looking forward to the Nigerian presidency under President Bola Ahmed Tinubu. So everybody is excited. And even Nigerians here are saying, listen, we want to do more back at home. We want to invest back in Nigeria. And that is part of the discussions that will be taking place today. And everybody is excited.
So what do you think President Tinubu is bringing to the table here? I do know that he's visiting, but what do you think he's bringing to the table? You've mentioned some of the key reforms he has already kick-started here in Nigeria. But what other things do you think world leaders are eager to hear from President Tinubu?
Nigeria, business with Nigeria, the new Nigeria, investing in Nigeria. And President Tinubu has shown, he has shown leadership. He has shown, it's given excitement to everybody that they all want to do business with Nigeria. And as you heard Mr. Dele Alake say some time ago, everybody just wants to meet Mr. President and come to Nigeria and see what business opportunities there are. And so are Nigerians here in the diaspora. We have Nigerians who are worth millions of euros that said, you know what, we're taking it back home. So as you can see, the president has shown his focus, security, subsidy is gone. Look at all the things he's done in less than 1 month. So he's bringing Nigeria to the table. And the fact that Nigeria should be the investment destination for anybody, including Nigerians living abroad.
This is fantastic news, madam. Well, you talked about your interactions with the Nigerians in France, in Paris. Well, you talked about their excitement to come back to the country and invest. But do you think, what are some of the concerns they must have shared with you or raised with you? Do you think, could you share some of those concerns, if there are any?
Well, the concern has always been, is our investment secure? Are we secured in our country? Things have happened, subsidies gone, foreign exchange rate has been merged. I mean, look at the things the president has done within a month. I think that is enough to show that things will change and that will only get better. A foundation has been laid. Nashwadi is building on that foundation, and it will, take us to where we truly should belong. I think that is it. And the fact is that, well, Nigerians may come abroad, but home is always home. And they're looking forward to that home that they will come to and be part of the engagements and policies and programs of the government. So what I just see here is excitement. What I see is hope, renewed hope. And what I see is we're all happy about what the news about Nigeria, The news about Nigeria is not negative. It's very, very positive. And we have a president who, despite not having a full cabinet in place, has just done everything that is expected to have done. So we have a president who knows exactly what he's going to do. And we have a president that Nigerians have faith in. And I think the appeal from even amongst the diaspora here is that we need to work together, one united Nigeria. Keep the hate aside, keep the bitterness aside. Let's just support Mr. President to do what he wants to do, and which is take Nigeria to where Nigeria truly belongs, in the community of nations.
Thank you so much. My investment destination, bringing Nigeria to the fore. And, well, maybe the Japa syndrome will begin to die down a bit now. Thank you so much, Mrs. Abike Dabiri.
No, about the Japa syndrome. You know, there's nothing wrong with Japa. If you Japa, you see, you're just going to Japada. Okay. If you Japa, you know, you're acquiring knowledge, you're acquiring education. We have a lot of Nigerians in the diaspora that are coming back home to even train younger people. We have a lot of, the doctors, for instance, always come with medical missions. 10, at least, have set up hospitals in Nigeria. So there's nothing wrong in jackpotting, but when you are jackpotting, where are you jackpotting to? What are you going to do there? Do you have a job? Are you living legally? Don't jackpot and get into trouble. Jackpot to positivity. Jackpot to become a better person. But at the end of it all, you're still a Nigerian. And let home be a place you want to come back to and contribute your own quota, because whichever way, home is home. So let home sweet. Make home sweet for everybody. And then under President Tinubu, he has told you how he's going to create jobs so that you don't need to struggle. You want to go abroad because you got better opportunities. There's no point going abroad and still not getting the job that you're looking for. I think that is the key thing. So job opportunities, there's opportunities for younger ones to get involved in. So look for those opportunities. However, if you jackpot to better place, and jackpot to become a better person, and jackpot to Nigeria to make your own impact.
Very important, jackpot, with the knowledge you've gotten. Thank you so much, Mrs. Abike Dabiri, Chairman, Nigerians in Diaspora Commission, for joining us on Business Incorporated.
Thank you.
Now we'll move over to Europe, where lithium is in high demand worldwide as electric mobility is on the rise. Now producers say they cannot guarantee long-term supplies. Lars Alter is with Deutsche Welle and joins me from Berlin. Lars, what exactly is the problem here?
Well, thanks for having me. I guess the biggest problem here is the incredible rise in demand for lithium. Just a few years ago, lithium was kind of a niche product, a metal that was only used by some pharmaceutical companies and in ceramics. But now it's one of the hottest commodities in global business. That's, of course, as so many things are being run on lithium-ion batteries, big batteries that power electric vehicles, bikes, scooters, and especially, of course, cars. As car makers are switching from combustion engines to battery power, the global demand for lithium has risen to what used to be unthinkable amounts. Industry projections are for a demand of 500,000 metric tons of lithium by 2030. And industry giant Albemarle says there is just no way that can be delivered. It's due to the number of mines as well as staffing shortages. Currently, there are 45 lithium mines in operation in the world, and 11 more are supposed to be opened this year, with another 7 next year, if nothing goes wrong. But things do actually go wrong, as we've just seen in Argentina, for example, this week, when Lake Resources pushed the opening date for their latest project by 3 years due to difficulties there. Also, by the way, lithium has to be refined once it's out of the ground, and there are currently not enough facilities to produce specialized types of the metal for batteries. Automakers may be forced to accept lower quality lithium, which decreases an EV battery's range and would be an entirely different problem.
So what can be done about this? Can lithium production be increased quickly?
Yeah, that's a very good question. Generally, in mining, things are moving rather slowly because mines, of course, can't just be built and expanded like any other factory. First of all, of course, you need to find enough lithium in any given place to make mining worthwhile. And then lithium mining is controversial. New projects often take a long time to get green-lighted. Partially, that's due to its environmental impact. Lithium mining needs lots of water, actually up to 2 million liters per ton of lithium. lithium extracted. And this creates a lot of pressure in local communities living in nearby areas. For example, in Chile's Salar de Atacama, mining has caused the region to lose 65% of the region's water. So no wonder lithium mining can't just be expanded easily, especially considering the water problems that many regions in the world are already experiencing. Now, there are companies looking into new ways to mine lithium or try out new places, including in Germany, by the way, where lithium is being mined in the Rhine Valley. But these operations too are small and won't be a global game changer when it comes to satisfying global demand.
So how worried are businesses and markets about the shortage?
They are very worried. All major car makers have now committed to electric mobility, as they should, of course, because the world is in the midst of a catastrophic climate crisis and has to move away from burning fossil fuels. Electrifying cars is one way, investing in wind power is another, and those wind turbines also need lithium to run. So there's major implications everywhere, including in the banking industry, by the way. At this week's Lithium conference in Las Vegas, there were representatives from Goldman Sachs, JP Morgan, and other big financial players. And that's because Wall Street is expecting a lot of transition in the lithium business, including mergers. So what was once a niche business has grown to dimensions apparently too big to handle. Markets and every company involved in battery technology will definitely keep an eye on that.
Thanks, Lars, for that update. Now to the U.S., where stock futures were lower on Friday as Wall Street headed for a losing week. Futures tied to the S&P 500 slid 0.47%. We saw the S&P 500, the Dow Jones also down 0.32%. Those are from the statement by Jerome Powell that more rate hikes are expected. Now, NASDAQ futures was also down 0.1%. Now, let's take a look at what happened in yesterday's activity, the performance for yesterday with Maria Bird.
Most of the U.S. stock market indices took a rebound on Thursday, as the S&P 500 spent most of the day under, but closed at 0.37% up. And the heavy tech NASDAQ led the way with the tech industry, as it popped up at 1%. Despite the promising two indices, the third index, the Dow Jones, was down by 0.01%, slightly under flatline. This is caused by what many are assuming to be the central bank hikes, which is creating a hawkish environment. But the Federal Reserve Chairman's second day of testimonies seemed to go over pretty well with Congress, even though he announced that there will likely be more interest rate hikes in 2023. This has investors a little concerned, but not enough to see a lack of a rebound on Thursday.
Thanks, Maria. Now, after the break, can South Africa become the hydrogen export hub in Africa? That conversation next. This is Business Incorporated. Welcome back. Earlier this week, South Africa and the governments of the Netherlands and Denmark launched a $1 billion green hydrogen fund. Under its transition plan, South Africa aims to become an export hub for green hydrogen, a fuel made using renewable energy and without greenhouse gas emissions. The Dutch Prime Minister Mark Rutte described the plan as a huge opportunity. Our correspondent Innocent Semosa joins me from Johannesburg, South Africa. Good afternoon, Semosa. It's good to have you on the program.
A very good afternoon to you, Will, and thank you so much for having me.
Now, Semosa, how huge of an opportunity is the deal for South Africa?
Indeed, Will, a lot of money, lots of plans, and it comes down to implementation, if you like. So the president, in his closing remarks, he indicated that the Netherlands and Denmark are actually the important trading partners in South Africa. Well, both prime ministers, they came with 130 business representatives coming to South Africa. They say that they've got faith in South Africa. They believe that South Africa has the resources to actually put together this green transition. And of course, just there's just over 100 billion rands worth of trade between these three countries. In fact, the biggest export last year, it was coal to this, that South Africa did to these two countries was coal. As you'd know, that the two countries are actually having challenges with electricity because of the geopolitical challenges in the UK. But of course, going back to your question, how big is this opportunity? I guess perhaps we should talk about because they're coming to South Africa. South Africa is going through a lot of challenges, and it doesn't look like they're doing South Africa a favor. As I've indicated, that they're coming with 130 business representatives. So that just goes to show, to tell you that they're looking for business opportunities in South Africa. So they're not necessarily coming to actually help South Africa, but in fact, they're here to look for business opportunities. And I'm saying that, in fact, because they said that they're not going to wait for government to put things in order. In fact, they will do it themselves. So again, it tells you that they really want to move forward in terms of, looking for better business prospects and expanding their markets in South Africa with regards to this green transition, Will.
Okay, so you talked about them coming in because they're not doing South Africa a favor, but do you think the 1 billion green hydrogen fund is an overly ambitious one? Especially, we all know Eskom's financing troubles.
In fact, you hit it on the nail. I couldn't agree with you more. South Africa is facing the energy crisis, unemployment, high unemployment, inflation. The electricity problem is not making it easy for small and medium enterprises. So, but they decided to come to South Africa. In fact, President Cyril Ramaphosa said to set up this green transition, they would have to put together some 319 billion rands. This is about just over 17 billion US dollars. But just to take you back, Will, in 2021, the countries, the likes of Germany, France, the UK, the USA, they pledged about 8.5 billion US dollars to South Africa towards this green transition. So these are just pledges, and at times people get too excited, and at times these pledges are not followed through, and sometimes these companies don't really redeem these pledges, as you would have seen this previous, South Africa Investment Conference, where trillions of rands were pledged by different companies. But at the end of the day, you would find that some of these pledges are really not followed through. So I get a sense that the problem here is beyond money. It's the problem basically is managing the money. South Africa is a beautiful continent, is a beautiful country, but the problem again, it seems as though it's poorly managed at times from its leaders. So you would see from the likes of Eskom, for an example, they would use money for unbudgeted projects. They would not prioritize funding. At the end of the day, they'll go back to Treasury, ask for more money. And when they ask from Treasury, it boils down to the fiscus, the tax, and it leaves many consumers out of pocket. So it's the problem here. So it's about managing the money. So also, these are pledges. Sometimes they're not followed through. It's overly ambitious at times, whereby people just get excited because of these big numbers. At times, they're not really followed through well.
That's what I think France's President Emmanuel Macron is trying to straighten out at the ongoing new Global Finance Pact Summit in France right now, because a lot of countries pledged $100 million yearly for climate financing, but we've not seen any come through, as you've mentioned. But what other barriers do you think are there that would hinder this project in South Africa from making the country the plan of becoming an export hub for green hydrogen?
Well, there are a number of factors, Will, the likes of the economy, technology, financing, and of course also the skill set. But beyond that, I get a sense that there are some political parties in parliament, the likes of the parties that call themselves Pan-Africanists and those who are subscribe to communism, they really don't like this green transition, the likes of the economic freedom fighters. In fact, as we get closer to the 2024 elections, many South Africans, they are really angry. They're not happy with the African National Congress. In fact, some of them speaking to me that they will punish the ANC at the polls. So if they do that, this could very well be that the likes of the economic freedom fighters, who are these are parties that are against, this green transition, they would have more numbers in parliament. As a result of this, they would be able to table motions to essentially block this process from essentially moving forward. So, in other words, they are Parliament, through passing of laws, they can actually table these, motion of no confidence with regards to this particular green transition. So it really remains to be seen whether or not this will move forward. Also, again, it boils down to how they're going to manage the money that, if they indeed receive the money for this green transition, it really remains to be seen whether or not this will go to the projects, as we've seen, whereby some leaders get tempted and there's big numbers, so they tend to use the money for something else. So it really remains to be seen whether or not this money will indeed, do what they said it's supposed to do.
Thanks so much, Innocent Samosa, our correspondent, Channel TV correspondent in Johannesburg, South Africa, for sharing those insights. And we'll look forward to, more good news from South Africa.
100%. Thank you so much, Will.
Now, still staying on renewable energy, Senegal has secured 2.5 billion euros of funding from the group of 7 countries to transition to cleaner energy. This makes it the first country that doesn't rely on coal for electricity to get funding under such a program. According to the country's president, Macky Sall, the so-called Just Energy Transition Partnership funding seeks to increase renewable energy to 40% of the West African nation's electricity mix over 7 years. The deal is modeled after the one South Africa is pursuing with G7 countries and several institutions to access $8.5 billion in climate finance. Now, the Central Bank of Egypt has kept its key interest rates unchanged, citing falling commodity prices and possible economic growth. As expected, the bank's Monetary Policy Committee left the lending rate steady at 19.25% and the deposit rate at 18.25%. The MPC says international commodity prices are likely to continue declining. Egypt's headline inflation surged to an annual 32.7% in May, just short of a record high from 30.6% in April. Month-on-month, inflation jumped to 2.7% from 1.7% in April. Now, Zambia has reached an agreement in principle to restructure $6.3 billion of debt with bilateral lenders, setting a precedent for countries struggling to service their liabilities. The deal marks the first major relief won by a developing country under the Group of 20 Nations Common Framework, and the parties will sign the Memorandum of Understanding in the coming weeks. However, details are still unclear. What is known is that the creditors led by China and France agreed to extend the maturities on their loans over some 20 years with a 3-year grace period. This could lead the way for other nations, including Ghana, Sri Lanka, and Ethiopia, to lock in negotiations with creditors from China, the Paris Club, and bondholders. More than 70 low-income nations face a collective $326 billion burden, with more than half of them already in or near debt distress, according to the International Monetary Fund. And that's a wrap on Business Incorporated. Do join us next week for another edition. Have a lovely weekend.